Good morning and welcome aboard. Welcome to daytradingmarkets.org. We're looking to get underway here with our group coaching session. You have a free access pass to come on in. Daytradingmarkets.org is the direct registration into our Zoom, so take advantage of it. Come in with a free access pass, kick the tires, ask questions. If you're new to trading, that's great. If you're just starting out, we can help you out. Get yourself set up and ready to go. Practice, practice, practice. We have a game mode situation for you based on your platform. It's really in just about every platform where you can simulate trade against real-time data, order entry. You've got your charts. You can practice trade based on a methodology and get good at it. This methodology is price action trading. Starts out in this case by setting key levels in the S&P 500 E-mini and working the market as those levels come into play and looking to come out with a profit against those areas. Short trades, fade trades, long trades, momentum trades. Looking to pick up 2 points plus on each trade. There is a trading technique here that is learnable by you, applicable by you. Based on our relationship, it is tweaked by us for you. In other words, you're not alone. You're able to ask questions to individuals that, in my opinion, have better answers because they are trading in and around the same levels, and we call them levels and zones for a reason. The trading around the levels and zones, so when you ask a question about a entry, an exit, a stop placement, you're going to get an answer because the individuals that are here, your trade along coach, is also looking to trade in and around those levels where appropriate. And you can learn from that. You can learn in simulation mode until you get good enough. And then you work with your trade along coach to break out of simulation mode into real time. And now you have somebody working with you to make that transition. Because quite frankly, trading isn't about trading. Trading is whether you are good enough to make money at it. And we're in the helping you become a success business for yourself. You have to understand the risks and rewards of trading. Some people do, some people don't. It's important that you understand based on the opportunity. If you need trading capital, we have affiliates that provide capital to you. You have to bring the talent, and we are in the talent building business. Hope that makes sense to you, but that's what we do. 25-year veteran trader, helping you develop your trading skills, hone your trading skills. It is a fee for service. You get a whole month of this coaching session, group coaching session. Generally, it's $500 a month, which is nominal against what you should be making. Right now, it's on for $250, so make sure you ask for the $250 price. Again, Benny, Jeff. Hey, Jeff, how are you, Oki? Hey, DF, good morning. Steve. Oh, Colin. Use the chat feature. For those that are joining us from the outside, join us on the inside. Daytradingmarkets.org. Put that into your browser. Remember, it's not .com, it's .org. Put it in your browser, join us live. We slug it out daily, bring new traders in, help adjust and tweak experienced traders. Everybody looking for consistent profitability, looking to pick up $200, $300, $400, $500, $600 per session. Our sessions go from 9 a.m. until 11. Then we have opportunities for you, and you just have to ask to get set up for one-on-one coaching sessions, and we can help you out with that. Once you sign up for this service and be part of this grouping coaching session, then we can set up a time to talk privately. We're setting up a calendar link where you can pick times, and we can have our 30-minute trader consultation about where you are, where you'd like to be, and how we can help you. If you like what we're doing here, tell your friends. Hey, Glenn, good morning. Welcome. If you like what we're doing here, tell your friends. Daytradingmarkets.org. Like us, share us, friend us based on the social. Like us, share us, friend us. What else is there? Heart us, follow us. Really does help us get out of the box. So find us within the socials. But this is our home base. We utilize Zoom. We do everything direct. We don't like having, all sorts of websites and stuff. We do everything live. We do everything in conjunction based on a relationship with you as an individual. And really the goal here is, so Don is trading for himself based on his level of trading and his mastery of price action trading. Saul is your host and mentor. He is a CME group floor member, trading floor member. He is actively scalping. He's been trading for 25 years plus, so he has a reason. Actually, I should say his reason is trading. It's interesting, trading and golf and other hobbies, but trading and golf, I think, is right up there. And also working with and sharing with individuals out there in a live market environment. So here's the TikTok for you when it comes to these daily coaching sessions, is that Sal's going to pop in. He's going to put up his charts. Right now, Don has his charts up. He's going to swap out the charts. And then he's going to do this pretty close to the cash open. What is it, 9:07 now? My eyes are correct. 9:07 now. Saul is interested this morning in banking money for himself based on his price action trading, and banking money and having an advantage over other traders by not only trading based on price action, but setting key levels right up against the cash open at 9:30. So the market is going to start percolating pretty close to the cash open. He'll set his levels. It's a pivot. The best way to distribute the levels is the pivot, and other levels on top and bottom of that pivot that he calls support and resistance. These are his areas of interest for this morning's trade that he believes gives him a trading advantage. The concept of better levels equal better trades. Individuals out there, traders, now Saul's been doing this for 25 years or so, pay Saul to receive his levels as they believe it helps them daily to frame the market. And they have learned over time that there are a lot better levels than the levels that are spoon-fed by software. In other words, if you think that your trading platform is giving you information that is unique, think about it this way. Every Tom, Dick, Harry, and Jane is looking to beat the market by mentalizing, twisting their trading platform and the tools it gives you. So we know trading platforms have levels. We know that there's various ways to calculate levels. There are all sorts of named levels. for a particular market day. The short-term levels, long-term levels, crosses, time frames, it's all in there. But every Tom, Dick, Harry, and Jane are all slugging it out using the same standardized stuff, and they end up in a mosh pit of losses, a train wreck, because they're all using the same stuff. What's the viva la difference here with Saul is you'll pick up on it pretty quickly. When you get his levels, when he gives them out in audio, write them down. Pay attention to what happens based on market change in and around these levels. Are they different than the levels you get spoon-fed from your software? I would say so, but we let you decide. Plot them, pay attention to them, listen, interact with Saul. He is your trade-along coach, potentially, if you decide to go that route. And he's able to work with you and hone you and help you get better based on your own trading, whether you're new or experienced. People come in here with one goal. Can they find somebody to help them focus on their trading based on in this case, to make money? And in this case, this is price action trading, which has been around for I would say forever, but I don't know what forever is. And that it gives you a leg up, in my opinion, over other traders trying to mentalize and twist up, what's going on, and trying to be really smart, which everybody's really smart at this stuff, but they can't figure out how to be consistently profitable. And Saul's here to help you focus and do that for a couple of hours to bank your money and go off and do something else. Now, it's our contention, and you could do other things, is that if you pick up on one contract your $100, $200, $300, $400 this morning, whether it's in simulation mode, disciplined simulation mode, which is our price action or Saul's price action trading methodology, and your discipline and execution of working it in. As a new trader, you pick it up and you work it. As an experienced trader, you add it to what you're doing and shed the stuff that's not working and focus. First on the levels, pivot, and other levels on top and bottom of that pivot. Then what to do with the levels, the entries, exits. And I say entries, exits, because that's where the action is. If you're getting into the stop scene, you're screwing up, but you do have stops for a reason. But it's really, where do you enter a trade in and around a level, and where do you exit in and around a level? And you're looking for the goal of 2 points plus, but you might get out sooner. You might, based on a multi-contract trade, be able to milk the trade based on covering one and working the other. But that is taught. That is not innate. We're self-taught, right? We try to pick things up. We listen. We're not big fans of group on group stuff, because that's really a watered down way to get to disaster, because you got a lot of yahoos just talking. They sound good. They whip it around, but I don't think they're at risk, and I think they're just messing us up. When you're a group on one like this, which is a group you and a one Saul, you have the opportunity to really get into it with somebody that's currently trading and has the experience, based on the action of price, the entries and exits, the stop placement based on how the day is set up based on volatility, momentum, and follow through. And you have somebody to ask questions to. I'm doing it this way. Do you think that's going to work? I should adjust and I can do it this way. Oh, wow, let me try that. And then you come back and say, hey, Sal, I tried that. That worked out, or, it just didn't work out as well. And you get a legitimate answer from somebody, because he's working those levels himself, so he can give you a value or a valued answer, because you're getting it from him based on his trading experience for that day in and around those levels. And now you have that kind of opportunity to work on your trading with an individual that has the experience to help you get better. Now, granted, Saul's not a magician, right? Saul is a individual that comes to the screens on a daily basis, sets his levels, and then he goes at it based on his experience. So he is at risk. He doesn't make money on every trade. He works his trade based on his discipline. You work your trade based on your discipline, and the results are what they are. You know, you got individuals out there that are guaranteeing everything and delivering nothing. Saul is here every day slugging it out and working with individuals to help them get better so they can stand on their own 2 feet and work the market on their own. And in this service, you're not alone, right? You've got somebody that you can work off of, bounce stuff off of, interact with, get good answers from. But you have to take you got to take ego out of it. You know, it's like, I don't know of how, you know, what is it, Cobra Kai, right? Mr. Miyagi. The idea is, who do you have to help you frame what you're doing, and then within that frame, get really good at it? Now, price action trading gives you that opportunity because you're interacting and working in and around specified levels. So think about that for a second. If you have a pivot, now you have an area that you can trade around. If you have a level on top of that pivot as resistance, and he gives 4 or 5 on the top, maybe 6 depending on the day, and then on the bottom you have resistance, those become areas that you plot. And then as the market comes into those areas, where do you step in and step out? You know, I think you might figure out pretty quickly that the levels are areas and zones. And when you enter a trade, you're not entering spot on that price. You're fading it depending on the action of price. And that comes with doing it and experiencing it, redoing it, re-experiencing it. First in simulation, until you get so good at this that you're itching to get out and make money. And then if you were in tune, you would want to work with your trade along coach as you make that transition. That's what people do that care about being good at something. You just don't become something. You don't become a surgeon by going in and hacking away at a body. You're taught. You're adjusted and you're tweaked. And then you do it again. And you do it better. Thank God for the patient. Same thing with golf. You don't go out and just hit a golf ball. You practice, practice, practice. Then you hire somebody to help you. And they watch your swing and they adjust and tweak you. Same thing here. And who would you pick to do that? Somebody in a chat room that is sitting in their basement. I can't even tell you what they're doing in their basement, but they're on there mouthing off as if they know something. And then you get a group of those people in the group on group stuff, and you're screwed because you believe them. I mean, how scary is that, right? They're good enough for you to believe. And they're just talking jargon and smack. And, you know, how do you do this as a business? How do you do this in a way that gives you what you need? That's what we're here for. You may like it here. You may not like it here. One thing you can't do here is be silent. One thing you can't do here is not join. You know, we don't, we've been doing this long enough, and it's been a while, right? To understand that people believe everything on the internet is free. I think a lot of the free stuff you get is probably what it's worth. Having somebody help you, work with you, tune you, spend the time with you based on their experience is priceless. And what we do here is nominal. I mean, you're supposed to be good enough at this to do, you know, your $200, $300, $400, $500, $600 per day. based on one contract. You start raising your contract size, and then you're in the game, right? So if you're balking at 500 a month for this kind of opportunity, then go away. Right now it's on for 250, and that's something you should jump on. But the point is that there's a lot of places you can hang and end up wasting your life. Because every time a minute ticks by is a minute gone, right? Some people are young, some people are old, but in the grand scheme of things, there is a term limit, right? So make hay while you can. Take it seriously. Do it as a business. Do it as your business. Now, again, if you need trading capital, let us know. When you're signed up and you are part of our service, we'll have that trading consultation. We'll figure out where you are, where you need to be, where you'd like to be. And then we can, first thing is be part of this daily group coaching session, group on Sol, if you will. Interact, ask questions, set yourself up, put up, have the ability to plot these levels, write them down. If you don't know what you're doing, ask. It's okay. If you're an experienced trader and you want to just work on consistent profitability, well, ask. If something is not working, dump it. Because it should be working. It's not just keep trying to do the same stuff over and over again. And unfortunately, standardized software gives you that false friend feeling that it's there to help you because it has a lot of bells and whistles in it. We're not big. I mean, if you look at our charts, right? Not much going on in these charts. It's really all about the levels and and what to do with those levels. It's funny, I have a bee in here. So that's why I keep looking around. Came at me just a moment ago. I guess it wanted to see if I was going to fight back. So we'll see. So take a moment to let us know. Hey, David, how are you today? Nice commentary yesterday, David. Appreciate it. David B. Craig, how are you this morning? DF. David J, welcome. Dennis. Dennis, I don't think you ever signed up. Are you a candidate to get pitched or what? Hey, Glenn, James, Jeff. Hey, Maureen, good morning. Hey, Maureen, how's your internet? Is it back? Yeah, bees are my friends too until they sting me. But I don't think these are honeybees. These are yellow jackets. I don't know if yellow jackets are my friend.
A wasp.
You're a wasp. Yeah, I know. It's crazy, right? We had a bunch of those lantern flies. I don't know if you know what lantern flies are, but they apparently eat trees.
Lightning bugs.
No, these are something that came in from another country that is invasive and negative for the environment. Apparently, I mean, I don't really know. I mean, I don't know who's calling the shots, right? But they're start out as little babies, right? And they're out there and they look really like harmless, and then they turn into these giant things that eat the trees or do something to the trees. I mean, there's not just one. I mean, it looked like there were too many to count. That was crazy.
Hey, Maureen. Thursday, I told you I had 29 trades. I had the date set wrong. I only had 18.
So you had 29 trades yesterday?
No, I only had 11 yesterday.
And how did you do yesterday based on that action? That action was great.
I thought it was. I thought this morning was great. I'm done. It's kind of like, okay.
So how did you do? You afraid to let us know?
let's put it this way. I did okay.
So wait a second. So what is okay in your camp? That's the interesting question, because that's the unknown. Like, what's a good day
Well,
for you
in
if
in
it's
what
working out
part?
for you?
You know, if it's working out, you ought to hit 20 points easy. And
Okay.
if it was like yesterday, 40, 60, 80, 100 points is not out of the realm. But yesterday, the market was moving. We had a high VIX, but, you know, normally I'm shooting for 20 points a day.
And how long you been trading?
Oh, round '02
And when did you meet Saul?
in 2000, in the latter part of 2015, early part of 2016, I believe.
So what Don is talking about is the first time that he came upon Sal Shaul, who was the trade along coach. He's the individual that runs the service. He is the talent. Don met him, and I can remember, Don, when you came in and you were questioning, asking, wondering, about this service and Saul. And obviously the service was a little bit different. Now that we have Zoom, it's taken on a different life.
Yes.
But I can remember you had taken other courses and done other things and were very well briefed and schooled on the concept of trading and trading education. And I guess the only thing to really say is that you've been here ever since. And I think that
Oh,
says it all.
it just, I like what we do. I think that's probably and you said it earlier, and this may not be for you. If doesn't fit your personality, and it's kind of like you're going to be a square peg in a round hole. It's just not going to fit. But if you like the concept, we are here to scalp. Now, 20 points a day is great targets. But, some days, if I only get two, that's okay too. We can only get what the market will give us. And, and, and we're here to scalp. I'm short, I'm long, I'm not a buy and holder. Uh, this morning I was I was looking for that 44, and here we are up at 46 now, but I just got tired of sitting in it. And so I got out of it.
Now, when you met Saul, did you take any coaching or classes from him?
Oh yeah. I took his coaching class.
Did you find it helpful?
Yeah.
I mean, I don't think there's any
the
any more to say. Is that you found him, you liked his demeanor, what he had to say, and since 2015, you've been here.
Well, what impressed me about Saul, and I think there's other people in the room that will agree with me. Doesn't matter what the market's doing, how fast it's moving, he is just the same then as he is when the market is moving slow. He he just doesn't get excited. I've been in these rooms where these people are yelling and screaming and it's kind of like, why are you doing all of that? If you're going to do it, just trade it. So I'm going, at least the guy keeps his head screwed on straight.
Some of
And
that's the group on group stuff that I was talking to. You go into some of these chat rooms, or organizations, and you've got a bunch of people in there that are just sitting in their basement with the lights off, and they're just, they're not trading, in my opinion, anyway. They may be simulating trading, and they're making themselves out to be gods, of the market.
yeah,
And people pay attention to them and they follow them right into the dirt, right into the ground. And they don't
and some,
realize that they're, the same people over all these years that are using trading rooms as trading daycare, for themselves. And it's really disingenuous. It actually really is can be creepy. And I
Yeah.
feel bad for the people that are sucked into it. You know, having this situation where you got a guy that um, is doing his trading and he has room to be able to add people into a Zoom room and be able to work with them. Now, Sal's coming in now. Give him a big warm welcome. I did post the opportunity to sign up. If you haven't signed up, sign up. Then we can set up a private trader consultation. I'll send out a Candly calendar link, and you can sign up. But that's only after you've signed up for our service. So enjoy the trading morning.
Let's give you our levels for this morning. Our pivot this morning is 52.34, 52.34. Upside resistance at 43, 53, 63, 75, 87. Downside support at 23, 06, 51.92, 75, and 62. Pivot 34, resistance 43, 53, 63, 75, 87. Support at 23, 06, 51.92, 75, and 62. All right, markets are still a little bit on the volatile side here a little bit. I mean, there are moments, so we have to be a little bit careful. These are the mini S&Ps. We do stick to one market, and we feel that we try to get good at one market instead of trying to nibble everywhere else. We understand, when numbers are released that are going to affect our markets, and we kind of stay focused with that instead of trying to be something. We're trying to be a little bit with it, having a little knowledge in other markets that we're not too confident about. Since we do a lot of technical analysis, some of our technical analysis work that we use here to find these opportunities in the minis probably could be used in other markets as well to get opportunities there. But again, we try to focus in with one. That way we don't get crazy and thinned out too much, and then not understand what's happening in that market and why it's moving. Sometimes we don't understand what's happening in this market, but at least we have some idea. All right, we're chopping around, coming up here to the 43 area. It's also our blue band. Again, it's a little volatile this morning, with especially the last couple of bars, so be a little bit careful here. Just very, very quick movements. I would still say you're looking about seven S&P points probably here, minimally. Again, look what happened in the last couple of bars here. They're just moving around all over the place. So keep that in mind as 7 S&P points for a stop. If you don't like the price action, you're always given choices here, especially on this rotation back down here a little bit to get out, especially since it's not, they just, it's that first couple of bars also initially after the morning bell does create some crazy volatility as well. So be a little bit mindful of that. You can see how the bond market's trading at a 125 handle. Just testing this 43 here again. You're giving a choice here to scratch some of them if you don't like the way the market's reacting. Definitely scaled in. The scaling in is all a little bit differently as well because of the volatility. If you're trading multiple contracts, you're looking to scale in probably about 3 points around a level. That'll be a little bit, again, if that's too much volatility, that's fine. Just step back and wait or trade smaller. Those are all choices you have as traders. And again, we're traders. We're not going to just put on a trade and just kind of go with it. We're going to look at the price action and kind of help us manage those trades once we get into them, especially since we don't get the rotation we're looking for right away. VIX is back down to a 32, which is half what it was, from the craziness overnight last night. And a lot of craziness this morning as well, yesterday morning as well. It's a little bit more tamer, even though you can see it's still the bars are very expanded, but still you have to be very, very careful. Pick your spots and trade them small so you don't get run over, and just take whatever the market gives us a little bit at a time. And if it and always keep your stops in place because the market can easily get away from us the way that these things are trading. All right, we're coming back in here into this little range that we've been at the last hour or so. Extended there a little bit to the downside and came back up, extended right up here to the 48 area, and then came back down. Again, remember, we're keeping about 6-7 point stops here with our trades, just because the market volatility is telling us so. All right, rotating back down here a little bit against that. Well, our blue band was coming in there at 45. Again, you have to look at, kind of find those little areas around our levels and see if you can. There is a reason to trade. Maybe you need 2 reasons to trade versus just one. Everybody has different risk tolerances here. Market's definitely a little bit calmer today. All right, Ken's kind of hanging around our pivot area here at 34. A little bit quieter today, like I said. Let's see if we have any numbers coming out this morning that could affect us. Here we go. No numbers. Just a lot of guessing what the Fed might do or might not do. Just an auction result at 12 o'clock, 3-year note auction at 12 o'clock if you're going to be trading around then. Okay, we're just kind of hanging around our pivot area here. Okay, a little bit more quieter trade today, so let's be careful. We did bounce off of, got up to 48 against the 43 that we had. Again, it was a little bit right on that first bar, and we always talk about the issue with the first bar there. Okay, again, if anybody has any questions, feel free to ask in the chat. We are scalping mini S&Ps. We're looking for opportunities that give us areas that of inflection that create scalping opportunities. Right now, because of the volatility, we're looking for about 7 points on 6 to 7 points on these rotations. When things were a little bit quieter, we're looking at about 2 to 3 points, but because of the added volatility over the last couple days here, we've expanded those. Yesterday we were at 7-8. Today we're a little bit calmer, maybe 6, 7, maybe even 5, depending on what your risk tolerances are. Everybody has different risk tolerances, and we have a education course that teaches our methodology and what to look for, how to find those setups and opportunities, and then to try to take advantage of when they present themselves. So if anybody has any questions, feel free to ask in the chat. We don't mind questions. Okay, market's getting a little bit whippy here. Downside support is down at the 23 area. That's our net support on the downside. It's coming just kind of hanging around our pivot area here. So if anybody has any questions in regards to anything that we do, please feel free to ask in the chat. We don't mind. Okay, so again, every day has its own set of dynamics. Yesterday we were at some point during the morning anyway, we were looking at, as we can see here, we're flushing down here a little bit. We've got 23 as our next support area. The average bars on the 5-minute bars were pushing around, what was it, like 21 points per 5-minute bar. That's a lot of volatility there. And again, like everybody has their own, set of risk that people take, and 21-point bars on 5-minute bars create a lot of volatility, and we try to adjust that by adjusting our stops as well to take that into consideration. But if that's too much for you, then we just step back and you kind of wait and let the market slow down a little bit before we jump in. And it doesn't have to be today, it could be tomorrow or next week even. But if the volatility is too great, then just step back and wait. We're looking at the 23 area next as our next level of support. Little resistance up there around the 43. If you were a little aggressive, that's where our blue band was as well, and kind of just stop there and quickly flushing down here to the 23 area. Again, make sure you keep your stops in place no matter what. We're not going to love any trade we put on. Very, very thin trade, as you can see. I mean, there's 20 lots up and down the ladder ticket. That's very, very thin. Yesterday they were single lots up and down. I mean, not even 10 lots. You can see they're slowly getting back into the swing of things here a little bit, with the traders slowly jumping in and trading a little bit more. Yesterday at this time, all right, there's a nice little pop here against our 23 area, giving us like 6 points here, getting up here to 29 and change. So again, you have to have your orders in place there again, we're talking about 6 points, and we are getting, I know 6 points is a lot as far as stops is concerned, but we're scalping, especially since we're scalping. We're not like, it's one thing if you're position trading, 6 points is not a big deal, but if you're scalping the market and trying to take a little advantage of ebbs and flows, it's a lot bigger deal. So we try to minimize those the risk here as much as possible. All right, coming up here to 29 again. So we had a nice little rotation there. We did get in, got down to 22 and change, and then pop back up here. Yeah, if you want to try to stay long, you could do that, but just make sure you can have a trailing stop or put your stop in below the low or something like that to see if you can't, if you're trading multiple contracts. If you're trading one lot, then just take your profits and be good with it. And you can see here where we're getting a little bit more than 6 or 7 points in our trades here. And this is how you can manage these trades to take a little bit more than that. And that's only if you're trading multiple contracts. So a nice rotation there against our first support level at the 23 area. If you did jump in there, again, we're scalping. We're trying to take rotation 6 points or so, 6 to 7 points, depending on volatility. Yesterday, we were a lot higher. But again, every day brings its own set of dynamics. And since the VIX is a little bit calmer, 30s are still high. Let's not get carried away here. 30 VIX is still a lot high. Yesterday, we're in 40s and 45s. So you can see here it's a little bit more tamer today. And we'll see where we want to go next. So a nice rotation there against our 23. Our next support level on the downside is down at the 06 area. We focus on the morning hours to give us those opportunities. We feel the ebbs and flows that are created in the morning gives us good scalping opportunities. The afternoon trade gets a little bit stickier. I don't know if that's the right word. There's a lot less traders and a lot, very, very thin. Like I said yesterday, at this point, we were trading. We had over 1 million contracts traded. Right now, we just are at 500, so you can see how the volatility is already a lot different than it was yesterday. A little resistance up there around the 42 area, at least for the time being. That could change. Again, if anybody has any questions, feel free to ask in the chat. We are trying to take advantage of ebbs and flows of the market. And we did dip down to the our first support area there, and coming quickly back up here a little. I said little resistance up here if you're a little aggressive. If you are trying to stay long, good area to exit. Again, volatility is great, and so take advantage of what you have and pick your spots. Don't have to over trade. The tendency is to want to trade because the markets are moving, but stepping back and picking your spots is what we're trying to do here more than anything else. Levels obviously are areas that we're going to focus in on, and there are price action trades, but those price action trades come with their own set of risks. I mentioned them, and you have to make sure you keep your stops in place in regards to those price action trades. What we do in our education course is we show you what those areas are and what those price action trades are, and things are a little bit slower. They become a little bit more tradable, if that's the right word. But right now, things are really bouncing around. So If you're going to trade those, make sure you keep your stops in place. Okay, like I said, a little resistance up there at the 42 area. And coming off of this very, very nicely. If you did jump in. Again, everybody here trades a little differently. I keep saying that, so there's not one right or wrong way of doing it. I mentioned a lot of trades. It's all up to you as individual trader whether you're going to take those trades or not. And also, if you are up a little bit of money and you're happy, that's good to go. You're good to go. The thing is, when these markets are like this, it's very easy to overtrade. And we're not here to give those brokerage houses the money. No, we're not. All right, so we just went right up to that 42 area, a little resistance. So if we get above it, could go retest. Well, next level of resistance up there is at the 53 area. We do not have any numbers coming out this morning, so that's we don't have to worry about that. Yesterday's numbers did create that push up to those interim highs, create a little bit of an opportunity for us. All right, we're looking at the 53 area next. There's a little resistance. That's our next level of resistance on the upside. Like I said, we got above the 44 area there. Looking to have a little bit of a push up here, coming up here to the 53 area now. Well, if I knew we were going to go down to 23, and then back up here, I would have told you to hold on, but we don't know these things. All right, coming up here and again, continuing to uptick. Next level we're looking at is up here at 63. Again, we're getting these like crazy bars, right? Pretty much, let's see, this is 38, no, 36 up here to 61. So you're getting these like crazy bars in the middle, like out of nowhere. Well, they're just got to be prepared for them. That's why you keep your stops in place. Okay, continue to uptick here a bit. All right, coming up here to the 63 area now. Okay, got right up there to 62 and change. And coming off here. Again, you have to, get out of one, get yourself back into the other trade. Can't let for one trade, if it gets to run over on the 53s, you got to get ready for the 63 area. And they got up to 62 and change here, and then nicely coming back down here a little bit. Again, we're scaling around it. We're not going to be perfect. All right, got down to 55 and change there against that 63 area. Again, so if we come back up here, it's already been tested. Be a little bit careful at 63, even though we didn't get to 63 because we got into 62 and change. We're very close. But so if you did jump in there, scaled in there, you should have been able to scale in there before that 62 area or right around it. And again, so now be careful here at 63, almost simply because we did get that rotation against that area, even though we didn't get 63, right? So maybe you're taking the upper end, maybe you're looking at 65, maybe if you're a little aggressive, but otherwise, be careful here. Again, you have to look at the price action to determine and make those adjustments. We're not just here just to put a level out there and just not make those adjustments because you're not going to look at the price action. All right, market continues to uptick here a little bit. Next area that we're focusing on is up here at 75. If you're going to touch the 65, again, keep your stops in place. 63 became pretty much a no-go because it stopped at 62 and change and had a nice rotation. And so you had to make the adjustment. If you did make the adjustment, maybe you took it up there a little bit to the upside of that entry point. And if you didn't do it at all, that's fine. You're looking at 75 next. Coming up here to our green band here at 68. For those of you who like the green band. Next level on the upside we're looking at is 60. Okay, nice rotation there against our green band. For those of you who are using that as the upside instead of the 63. Again, very volatile, quick moving. You got to pick your spots, keep your stops in place. I'm not telling you anything that we don't know. And if the volatility is too great, then step back and wait for the market then to settle down. And like I said, it could be tomorrow, it could be next week. All right, nice rotation there against our green band on the top side there at 68. Yeah, definitely. If you took the 65 and you had a stop, 6 points or so, that's fine too. You're getting a nice rotation here off of that 65 as well. So either way, hopefully you were able to maybe jump in there in the top end of this little range here around the 63. All right, we're just chopping up here on the top end. All right, upside resistance is up at 7. The next level is 75. All right, coming up here now to the 75 area. Again, depending on how you are scaling in around there. We talked about different way of scaling in based on your risk tolerance. Definitely a point above and below is too tight of a range, given the volatility. Minimally, at least 2 points above and below would be more adequate given the volatility, but we can even go to 3 points. Again, that's all depends on your risk tolerance as an individual trader. Everybody has a different risk tolerances. So got up here to 72. Some of you did jump in there at 72. Again, a nice little bit of a rotation here. All right. So again, if you did jump in there at 72, or if you had an order around there, it got right up there to 72 and rotated off. The 75, we do have some resistance up to 77, 78. All right, we got right up to 71 and change there and coming back off. Again, we had 75. So again, depending on how you scaled, some of you got them, some of you didn't. If you didn't, then that's fine. Just look at the upper end of that 75. So if you're more aggressive, maybe you're still taking the 75, again, depending on your risk tolerance. But if you're more risk averse, you're going to be very careful around the 75. Again, if anybody has any questions, feel free to ask. We're looking for opportunities to scalp the market, and based on the levels we gave out and the price action opportunities that might occur. We're looking right now about 6 points on our rotations with our stops, 6 to 7 points depending on your risk tolerance. Given the volatility, that changes. Yesterday we were up at 8. Today, right now, we're at 6, maybe 5 to 6 area down in this range. Given that volatility is a little bit less, even though there are moments where the markets do run out and create some greater volatility. But that's why we keep your stops in place. See, the market meltdown seen yesterday isn't getting any less volatile with things now moving in the opposite direction. Japanese Nikkei ended the session up 10% overnight as we continue to push up here to these interim highs again. Remember, be a little bit careful at 75 depending on your risk tolerance. Marking its best session since 2008, following a plunge of 13% on Monday. Much of the volatility is said to have embarked in Japan, where a carry trade based on the yen went sour as the Bank of Japan raised rates during the same week. The Fed signaled its intentions to cut. Over in the United States, stock indices rebounding this morning after the VIX volatility gauge soared to pandemic-era highs. There are some S&P winners during the wipeout yesterday, which saw the yield curve uninvert for the first time in 2 years. All right, we said we were going to be a little bit careful there at 75 for the reasons we talked about. Maybe if you're going to be a little aggressive, maybe you're taking the 78, 79 area. Again, you have to make adjustments based on the price action, and there was a reason why we told you to be a little bit careful there at 75. And then maybe jump here at 78 if you're a little aggressive. Otherwise, you're waiting for the 87 area. Kind of for the same reason we kind of were off the 63s because we got to 62 and change. The same thing here. We got if you were scaling and you got in there at 72 against a 75 and then stopped. So then 75 becomes a little bit more tenuous. And so again, you have to make adjustments based on the price action, especially with the volatility. The new volatility adds a new dynamic to the trade that we haven't seen in a while. Let me give you some more levels here to the upside, just in case we continue to uptick here. Our next level up here is 87. Then above that, we've got 5302, 19, 33, and 47. So above 87, 5302, 19, 33, and 47. There are the additional levels in the chat in case you didn't get them or didn't write them down. They are in the chat for you. Thank you there, Maureen. All right, we got up to 83 and bouncing back down here a little bit. Again, we talked about the 75 being very tenuous. Maybe you jumped in there at 78, got up there to 83 and bounced back down here. You definitely have to look at the price action and make adjustments to the levels based on the price action. With the volatility here, that could change drastically. And quickly. All right, coming back down here a little bit. I would say there's a little bit of support right now around the 50 area. All right, next upside is up at 87. VIX is down to a 28 handle, 28.33. So we can see how they're definitely the volatility with these rally back up is cutting that volatility down. Downside support right now, looking at the 50 area. See, seeking to reassure investors, Federal Reserve officials chimed in as the market mayhem took center stage. San Francisco Fed President, said monetary policy is clearly working in a way intended. And it's still too early to determine if there was real weakness in the labor market. Friday's job report data isn't indicative of a recession, added Chicago Fed president. We shouldn't react to one number, and we should always be forward-looking, noting that there's still no recession despite the yield curve being inverted for 2 years. Okay, trying to calm everybody down after not doing anything over in the last meeting. All right, just kind of chopping around there a little bit. And we went to our, see, went down to our green band there and popped back up. Again, we have different opportunities there. And everybody here trades a little bit differently. Definitely have different opportunities for when markets are moving around. Markets are slower. Everybody trades just that much differently here. And you have to know your risk tolerance to be able to manage those trades according to your risk tolerance, not somebody else's. So basically, you have to know how much risk you are willing to take. That means how many contracts you trade, how you scale in, if you're trading one lots, what your profit targets are, keeping your stops in place. All those come into play. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. If some of you are new here to what's going on with this futures trading, we're looking to take advantage of just different types of trading futures, different ways of trading futures. You can position trade, you can scalp, or you can day trade, meaning start a position early on and kind of just see what happens. All of those determine risk. All of those need risk determinations as to how much you're willing to take as far as risk is concerned. And that's what we try to work with you on, finding areas that might be tradable and then understanding why we would trade them. All right, we got down to 69 area there and bounced back up. The next area we're going to be kind of focused in on would be around the 87 area. Got right up here to 82 and change and see where it wants to go from here. All right, we're just kind of staying up here on these interim highs. No numbers coming out today. Just a 3-year note auction later on this afternoon. All right, we continue to uptick here. Looking at the 87 area next. Again, depending on how you are scaling in there, right up to the 84.75 area there against our 87. So if you did scale in 3 points or so, getting a nice little rotation here. Again, there's reasons why we are, you know, having to adjust there a little bit. Got again, if you did jump in there right around 84, and getting a nice little rotation here. And so obviously now the 87, because basically we got in on the lower end. We definitely have to make adjustments according to what the market is telling us. And this is why I know it's hard to have a 3 or point scale, but this is what the market is telling you to do. So if you did jump in there at 84, you got a nice rotation, got down to 80, 77 area there, 76. So nice little rotation there against that first entry point against our 87. So again, now we're going back. We got the same situation again where you have to be a little bit careful there of the 87 simply because of how the market traded on our first entry point. Maybe if you're going to do anything, you take the upper end. If you're a little aggressive, if you're more risk averse, you're waiting for the 02 above. Again, you have to look at the price action to help you determine how you're going to manage these trades. And really, you only need 1 or 2 trades these days to make a little bit of money because of the volatility, right? The thing we can try to do more than anything else is try not to overtrade. The VIX is falling out. VIX is 27. All right, continue to push up here now. We're coming up to, again, be a little bit careful here at 87 if you're going to trade it for the reasons that we talked about. right, you can see here they got right up to that almost 87, 86.75. So this area here, little resistance coming back down here a bit. Again, depending on how aggressive you are and how you scale in. Could we repeat the levels in the chat? Somebody's asking for them. There they are with the additional levels on the upside there. All right, again, pushing up here to these interim highs. They tested this 87 area. It's testing this 87 area. It seems to have been working for us. All right, coming back down. A little support right now would be around the 55 area. Again, the 87 area worked for us. It's been kind of hanging up here and kind of holding very nicely. Okay, we're busting back down here a little bit. A little support. We'll be back at the 50 area. a little bit of a break here. So the 87 area worked exceptionally well, depending on how you were able to manage it or not. Maybe you were in early. Then again, we didn't get up to 87, we got up there to 675, but depending on your scale, maybe you were jumped in and were able to take advantage of it. We didn't get above that 87, but the 87 area worked. Again, depending on your how you manage that, and everybody here manages it just a little bit differently. All right, we get support down at the 50 area. This next level, we're kind of looking for a little bit of support. Well, actually 55 right now, sorry. Again, if anybody has any questions, feel free to ask in the chat. We also focus on the morning hours to give us those opportunities. So we think the trade kind of changes as the afternoon goes on, but the levels you can use all day long, especially if we extend here one way or the other. All right, we're pushing up here to these highs again. We're looking at the 64 area. I'm sorry, 64. Thanks, Don. We're looking at the next level on the upside is up at the 5302 area.
Hey, Saul, let me know when a good time to pop in is.
Okay, you can do it now, I guess. We can see. We're looking at the next level. I mean, the 87 will work, so we're not doing that again. You're only being very aggressive here if you're going to take the 90 on the top end. Otherwise, you're looking at the 5302 area next, and downside support will be around the 55. All right, you can go ahead now.
Hey, a quick shout out and welcome to those that are joining us today. We have subscribers in and we have guests in. For those that are joining us from the outside, pop into daytradingmarkets.org. That is our Zoom presence. That's where all the action is. This is a group trade along, educational trade along focused on the S&P 500 E-mini. For those that are joining us in Zoom, welcome. If you're coming in for the first time, great. Kick the tires, ask questions. If you're new to trading and need a trading platform, ask. If you are looking to earn a funded trading account, ask. We have opportunities for that. This group trade along is a paid for service. You're coming in as a guest. I just posted the opportunity to sign up at a significant discount. It's generally $500 a month to be part of this service, to trade along with Saul based on this educational format. He provides you with key levels that are worth the price of admission itself, and you can figure that out on your own by tracking the levels. Saul is also available for one-on-one coaching, so please inquire. If you are a subscriber, we're setting up a Calendly link for the opportunity to have a trading consultation, opportunity to learn more about this service and what the opportunities for you are. We get a chance to learn where you are on the curve as you're trading, whether you're new or experienced, and we can lay out the opportunities for you based on the services that we have, and that'll help you look to develop consistent profitability in your trading. So that's what we do on a daily basis. We start at 9 a.m. Eastern time. We go to 11. Right now it is 10:40. We work the market for a couple hours based on a price action trading methodology that is teachable by us, learnable by you. Don't be a stranger. When you pop in, say hello in chat. Let us know a little bit about what you're up to, whether you're new or experienced, and then we can set up a time to talk to you. I did post a link to sign up at that discount. And again, if you're coming in from the outside, like us, share us, repost us, heart us. It's very helpful for us within that social. And as you come in out of that social, use daytradingmarkets.org as the link to drop in with a free access pass. And looking forward to helping you. Thank you.
Okay, we got right up to 90, the upper end of the 87. Like I said, you're going to be very aggressive if you decided to take that. And otherwise, you're looking at 5302 on the upside. There you see the additional levels that we gave out this morning to the upside. In the chat. All right, our next level that we're focused in on to give that we think might have some resistance is up at the 5302 area. All right, market continues to uptick. We had support down at 55. It only got down to 65 there. All right, we continue to uptick, looking at the 5302 area. All right, we continue. We're looking up here at the 5302 now. This time we got right up to it. Again, make sure you keep your stops in place. Let's see what it wants to do up here. All right, pushing up here to these interim highs. Well, the highs from overnight. Let's see what it wants to do up here. Again, keep your stops in place. Use the 4 to give us the, get up here on the top end. Again, whatever we do, you're going to keep your stops in place. We're not going to love any trade we put on, and do trade it small enough so that you are comfortable with the position and not going to get scared out of the trade. All right, working this O2 area. A big 800 lot up there at 10. All right, again, right up there. We saw that big order there at 800 lot there at 10. Again, if you got stopped out, I get it. If you still have it, that's fine too. Just try to see if we can get a little bit more out of it. And if you got stopped, I got that's fine also. We'll look at our next opportunity. Right now, support would be around the 70 area. All right, it got down to 96 there. Again, you had to obviously scale in if you did. If you didn't, if you got stopped out, that's okay. We'll look at our next opportunity. And the markets are moving around very quickly, and you got to stay focused and also make sure you stay disciplined. Trade them smaller, trade them to size that you can manage and not get scared out of the trade because you're losing too much money on it. And you're going to get rotations on these trades because the markets are moving quickly. All right, just kind of hanging around this even area here a little. All right, a little support right now would be around the 75 area. All right, coming back down here a touch, looking at the um, 75 as support. All right, we got ourselves on a little bit of a range. Not surprising that it's hanging around the the even area up here. Now we got support down at the 75 area, and next upside resistance is up at the 19. Very, very uh, choppy little trade, kind of runs through a little bit. That's why we give the extra uh, space to be able to maybe stay with the trade in case it does run through any levels that we have. Obviously, with the volatility that's in the market, you're going to get that. And if it's a little bit too much volatility, then we just step back and wait for the market to settle down and give us opportunities that are a little bit more within your risk tolerance. And everybody again here has different risk tolerances. Markets will slow down, will come back down to quote unquote whatever normal is. The VIX being high in the 30s and now drifting slowly back into the 20s. We can get into the low 20s to high teens. That's where it's up. We can tighten the ranges a little bit, tighten our stops a little bit. And again, if this is too much, stops are too big for you, then just you know step back and wait for the market to settle down. And like I said, it probably might not be today, might not be tomorrow, but it will settle down, give us some more calmer or more opportunities that are not as slippery as they have been over the last couple of days. You will miss these kind of opportunities because of you will miss them because this here you get some quick rotations, and sometimes it's good, sometimes it's bad, but you have to stay with the program, and that way, at the end of the day, hopefully, we are on the plus side here. But you always got to make sure you keep your stops in place because we're always going to have those trades that are going to run us through, especially with these um, the extra volatility in these markets. All right, with that, we'll get back here in a bit. We gave you levels to focus in on. We gave you additional levels to the upside, and we gave you some support levels right now. Is be around 75. That could change, obviously, when the market changes. More support down at 55. We get below the 53 area, we could rotate lower. And just be patient, pick your spots, and trade them smaller, and make sure you keep your stops in place. Get back here in a bit.
Hey, Maureen, thank you. Hey, Omar, welcome back. How are you doing? Come to the end of our group coaching session. If you have any questions about one-on-one coaching, ask. If you're joining us from the outside, join us on the inside, daytradingmarkets.org. If you're a new trader, we can help you get set up. If you're an experienced trader, we can help tune you up. The goal here is to help everybody develop consistent profitability when they're trading. We're focused on the S&P 500 E-mini here. If you need a trading platform, let us know. If you're looking to earn a funded trading account, let us know. We are in the business of teaching and mentoring traders how to trade better. We have one-on-one coaching classes. Inquire. First order of business is to sign up for these group coaching sessions. We start at 9 a.m. and we go to 11. Right now it's 11:07. Hey, Omar, that's great. Appreciate you popping in and saying hello. I don't know if Sal saw you earlier. Might want to pop in tomorrow. I know he's off to the races. Had a good trading morning. Good trading day yesterday. Okie, let us know. Michael C., Jeff K., James C., Bob T., everybody else. And again, those that are joining us based on our outreach, like us, share us, repost us, heart us, follow us. It's very helpful. Yeah, Omar, it definitely has been a while. And the world is spinning. There's a lot that goes on here, both publicly and privately, for your success. So make sure you ask. see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. If you need charts, we can help you get set up. If you need order entry and charts, we'll help you get set up. If you would like to have real-time data, charts, and order entry, start out in simulation mode, work the market based on a price action trading methodology that we're teaching, get good at it, and then learn to pick up money based on your developing expertise. This is a session daily from 9 a.m. to 11. Right now it's 11 a.m. It's August 6th. Everything we do here is for educational purposes only. Nothing to take direct trading or investment advice. One-on-one coaching with your trade along coach is done in a private Zoom meeting room where you can share your charts when you get them up. If you're an experienced trader, it's great. You just got to switch to the S&P 500 E-mini. And this is your opportunity to become an entrepreneur. Work the market. You know, that's right. You're an experienced trader. You come in, I guess just like a new trader would. Once you're set up with your trading platform, you can plot the levels. You know, we started out the trading session by plotting levels as a trading advantage to you. Saul starts out plotting levels pretty close to the cash open as a trading advantage to him. Then he gives them out to you as a trading advantage to you and a teaching tool. And it's a lot better to have areas of interest so that you can look at those areas of interest, see how the market behaved, and then ask questions to your trade along coach about the price action, what you could have, what you did, what you could have done, what you could have done better, what you did well. And then what did you get out of that trade? So they had 52.34 is the pivot. They had resistance above at 52.43, 53, 63, 75. Now you'll notice that there are more levels because of the volatility in the market. And then the levels are adjusted and tweaked based on the action of the actual price and how the market is behaving so that you can not be stagnant, you can be fluid, flexible in the art of trading for your own benefit and your own outcome. Like below is 50, you know, so we had the pivot of 52.34. Below we had 23, 06, 51, 92, 75, and 62. Where's the market trading right now? $52.90. The point here is how do you get better at how do you start out in your craft and how do you inch by inch get better so that you can do this on your own?
Just spent 6 days across the pond, so here are 10
Yeah, I appreciate those that are joining us through our social outreach, for liking us and sharing us. It really does help us. And again, it's up to you to decide if you want to pop into join us at daytradingmarkets.org. We have trading platforms, trader education and coaching. It's all done live. We have trading capital available. Concept is watch, listen, learn to trade better. Now via Zoom at daytradingmarkets.org. Like us, share us, repost us, friend us, heart us, follow us. And if you go into our home base, let's say an X, find it, Day Trading Markets. It's Day Trading, it's at Day Trading MKTS, at Day Trading MKTS. Once you find our home base, like us, share us, follow us, heart us. If you see a heart, add a heart. If you see a thumbs up, add a thumbs up. In other words, multiples are good. Definitely, friend us, follow us. That's important. We're up to 5,000 and change. We want to be higher. So we appreciate you doing that. You see a series of three charts in a separate chart window. I've been looking at the bonds to see how they've been reacting. If there's something that happens overseas, generally, or in the past, I guess it's not indicative of future results, as they say. But there's a general flight to safety, flight to quality. America has been that flight to quality. Our treasuries have been that flight to quality in the past. If it does happen, it drives interest rates down. As the market goes up, interest rates go down. And that's a good thing. One leads to the other. We did have a major dislocation overseas starting in, I think it was Japan, based on the way some of the trades were set up. And then the reaction. The concept of volatility shouldn't scare intraday traders. If you know what you're doing, you know how to handle the market, and that's what we teach, right? We're in the business of helping you, working with you, helping you get set up, based on that opportunity. But the key is you need to have markets that move up and down, because in this case, you can make money trading the S&P 500 E-mini when the market is going up and down. And you can drop money into your account based on your trading expertise.